Welcome to XM.com. You're watching today's Daily Market Comment by Mario Sajikiriakos. I'm Cristina Marujos. The relentless rally in the US dollar has left a trail of destruction across the FX market, with every other major currency suffering some serious damage. This trend reflects both solid US economic fundamentals and the storm clouds gathering over other regions, where a deepening energy crisis has brought Europe to its knees, while China remains committed to growth-crippling lockdowns. European Commission Chief Ursula von der Leyen warned companies not to succumb to Russia's demands for payment in rubles, escalating the standoff with the Kremlin and sending natural gas prices surging. The euro has been taken to the cleaners, and its collapse will simply compound the eurozone's problems, making it even costlier to pay for imported energy and amplifying inflationary pressures. That's a vicious spiral that will eventually hit growth by squeezing consumers further. The yen took another dive after the Bank of Japan reaffirmed its commitment to keep a ceiling on Japanese yields, squashing any speculation about policy changes when it concluded its meeting earlier today. Inflation is still very low, and outside of the yen getting smoked, there isn't any huge urgency to tighten. The Bank of Japan has waited for decades for its chance to import some inflation and jolt inflation expectations back higher to get the Japanese economy running again. It won't waste this opportunity, even if it means the yen has to suffer in the process. With the euro and yen stuck in the mud, sterling hamstrung by its sensitivity to stock markets, and commodity currencies trembling in fear of a demand crisis in China, all roads lead back to the US dollar, reclaiming its status as an all-weather currency. The Fed meets next week, and markets have already priced in 50 basis point rate hikes at each of the next 3 meetings. It's difficult to go any faster than this, otherwise there's a real risk something breaks, whether it's the stock market or the housing market. Crossing into the equity realm, Wall Street closed a volatile session virtually unchanged on Wednesday. Investors continue to grapple with a range of risks, and the earnings season provides another reason to manage risk exposure. Nobody wanted to be a hero ahead of the earnings release by Meta Platforms after what happened last quarter, but the company's results were solid this time, catapulting its shares 18% higher in after-hours trade and lifting sentiment across the entire market. The baton now passes to Apple and Amazon, both of which will release their results after the closing bell today. Thank you for watching the Daily Market Comment here at XM.com.